The Trade is brought to you by ACY Securities, Tim Cahill's official FX and CFD trading partner.
Hello and welcome to The Trade. It's great to have your company on this Monday. My name is Kyle Rodder and, well, my guest this week, or my guest today, Duncan Cooper from ACY Securities. Duncan, great to have you on the show. To say it's going to be a big week is obviously an understatement. We've got some major central bank risks, FX volatility in the spotlight. Let's start off with the US dollar index now, because you're looking at some, interesting levels at the moment.
Sure. When we last spoke, the question was, were we going to break down to the downside? And we broken below 101.89 and the 100 level there on the weekly. Just having a bit of a bounce back. I think traders may see a pullback to the 101.89 level. And then the question will be, is that going to be resistance for a move down? Of course, potentially expecting a rise on the US side this week on Thursday early morning, 25 base point rise potentially. So we just drop down to the day chart there. I think traders can get a clearer view of what could be happening of the range that we've been moving down. There's a 62% retracement there that overlaps with the 101.89 level. So we could get back to there as we get into the FOMC meeting minutes, or I should say the FOMC statement. And if we, what is the announcement after this statement? That's I think the clear thing, isn't it? What's the guidance after we have the press conference? So I think that's a level to watch as we're looking at the dollar index. As we head into the statement, 101.89, have we pulled back to that level, or are we pulling back to that level? And are we going to see a further decline for the US dollar? Clear downtrend there, so I think we're just having a corrective rally. And can we move down by the end of the week?
Yeah, indeed, and it's starting to look like a bit of a structural downtrend. We'll have to wait and see. Again, that guidance is going to be all important. But we're in a bit of a cross-section for the next pair, EURUSD, obviously very influential in terms of where the dollar index trades as well. But we've got a lot of data this week out of Europe. Interest rate policy will collide, if you will. So how are you seeing things set up here when it comes to the EURUSD?
Sure, as you say, we've got interest rates for the US early Thursday, Eurozone late Thursday. And I've just mapped out the larger blue swings there, the weekly chart swings. So we're just having a corrective pullback, very much the inverse of the dollar index. And two levels I'm watching. Ideally, as a trader, I'd like a deeper pullback, but at the moment, we're just managing to hold on the monthly high there at 110.95, the old yearly high for this year. But as a trader, if we can get a deeper pullback to the 110.12 area, the weekly high, that would be excellent. Buying a large dip in the uptrend would be great. So I think once we get past the euro interest rate decision, are we anywhere near 110? Are we starting to turn around? That would be a good level to watch for traders for maybe the next move up.
Yeah, okay. And well, as we can see, since the last time we spoke, making a new short-term high there. So maybe, some structural bullishness there for the EURUSD. We will have to wait and see. Go on, Duncan.
I'll say very much so, We had a very bullish move up above the monthly high there. And as you say, the structure is very bullish. We're just having a corrective move at the moment back down.
Yeah, without a doubt. And as you highlighted there, just a couple of those key levels, 111.85, 110.12. Okay, let's get to another pair now. Also interesting, the Bank of England is the odd one out when it comes to the major G4 central banks to hand down policy this week. Nevertheless, will remain in focus as speculation mounts about perhaps the need for more aggressive policy from the Bank of England. What are we seeing here when it comes to the GBPUSD?
Well, that's right. I mean, we had lower than expected inflation figures last week. So we had a heavy sell-off, post, I think, Wednesday, Thursday into Friday there. Again, it's at a very key level. Thursday, Friday, we were holding at the old weekly top. So very similar bullish move that we had on the euro dollar. It's been seen on the pound dollar above weekly highs. So we're just holding there. So in a perfect world, early week, if we are starting to hold at 128.48, there may be the opportunity then to get in for the next move up. And of course, we don't know what the market will do when the FOMC statement gets released, but this could already be at 130 by Thursday if we can start to see a clear support at 128.48. So that's the key level to watch. Of course, they may be a little bit less hawkish now in the UK with inflation falling, but still very structurally in an uptrend there. So I'm watching 128.48 over the next few days for support for a move higher.
Okay, keep an eye on that level, and well, again, setting up very similar, obviously, because the US dollar's influence to the Euro USD there as well. So 130 on the top side, 127.59 there to another key level in the short term on the downside. Another pair to watch, and this is where we get back to perhaps central bank events this week. The USDJPY pulling back from that 145 level, which was key because we're all speculating whether Japanese policymakers might do some sort of level of intervention. But quite a steep pullback. What are we looking at here in terms of, well, potentially the next move? Because, you know, from what you've outlined here, it looks like maybe the risk is skewed to the upside here for the USDJPY.
Well, at the moment, the overall longer-term trend on the weekly chart is up. These swings have drawn in. It's the weekly trend, the picture of the weekly trend, and that sell down from 145 is a very similar leg down to the previous one that we had from 137.90. Of course, on Friday, we've got the Bank of Japan Outlook Report, Monetary Policy Statement press conference. It's always, you know, very volatile when that comes out. But, you know, getting support at weekly support. Last Tuesday, I put out to our clients to watch 137.90 for support, and it was good support. And just watching, maybe we can have a pullback to 140.44 early week for a move higher. Of course, the US dollar has been declining, but on the dollar yen, we obviously have the interest rate differential very much favoring the US dollar side. So with the interest rates rising potentially again this week, the market's already forecasting that in, and potentially forecasting in no real change, no policy change from the Bank of Japan. So I guess with that, all things being equal, the dollar yen is leading to the upside. I mean, as you were saying, intervention at 145. I did see a few days intraday there where we're starting to get a couple of 100-day sharp pip movements down. So, you know, as we do maybe approach back up to 145, we may well see a little bit more intervention coming in. So we'll have to wait and see. But still structurally very much an uptrend there on the dollar yen with that, you know, that carry. And, you know, the likes of the euro yen and the pound yen at the moment, seeing those pairs, they've only had around about 1 or 2 weeks pullback. And the euro yen, you know, last week already started to test the high of the year. So we're definitely seeing yen weakness coming back into the market.
Yeah, definitely. And of course, we'll be looking at that meeting just for any speculation that they could tweak yield curve control. That would be remarkable if they did. Could be a very volatile pair in the week ahead. But let's talk about, well, one of the most volatile pairs in the G10 space. And of course, our domestic currency. The Aussie USD here largely looks fairly range bound, selling off again since we last spoke from that 69 level. So is it really just waiting to see which direction we break? It looks, you know, very interesting in terms of the setup here.
Yeah, well, for most of the year, we've been range bound. Of course, we had the employment figures come out last week, still at 3.5. So, you know, the RBA's wanting unemployment to go up, and it's not. And of course, we've got CPI data coming out on Wednesday. And then, of course, on the 1st of August, next Tuesday week, we have the interest rate decision. So market's pulling back. 2 key levels to watch through the week. 67.05 support, that's daily support. And I've drawn in a broader range there. The blue lines are the broader weekly range there. It would be great if we could get a really deep pullback to 65.95, around about the 66 level. And can we find support there for maybe a move all the way back up to 69? So a very broad range. It would be great if we could meet the bottom of the range and then look for an opportunity to maybe trade back up the range.
Yeah, without a doubt. And those are the levels to watch. Obviously, it's always great when you have those big key markers there. We can obviously set our stops accordingly and manage risk for any potential move. But Duncan, really interesting. Again, it's going to be a big week. We set it off the top. So really appreciate you taking us through some of the setups going into it. We'll do it again soon. Duncan Cooper from ACY Securities there.
Thanks, Carl. My pleasure.
Okay, well, that does it for this edition of The Trade. But be sure to tune in 2:30 every day this week for more trading action. Thanks for watching.
The Trade is brought to you by ACY Securities. Tim Cahill's official FX and CFD trading partner.